Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles, Twitter feed, and website. Okay, lots going on. Market's down a little bit again today, a little bit more again today. So we're going to talk about, first of all, how that's set up and a little bit about the rollover and now what we should be doing. And so I want to just show you some perf charts. Obviously, the large cap names are also getting pulled down a little bit. Apple has been very resilient, but I guess when you're buying back 75 billion in your shares, you can kind of hold things up. Same thing with Microsoft. They also have a long one, a big buyback program of 40 billion, but Amazon is breaking a long-term trend line today. So I want to show you that. And this is a great opportunity for us to take really strong stocks that are now going to pull back because people are selling momentum and set up that list. And so I can give you an example of a scan, and then you can tweak it and play with it and try to find the names that you'd like to have on that list. And then keep watching all these IPOs. So obviously, they've all sold off, Slack and WeWork, and then there's the burger companies like Shake Shack and some of those that have been great. And then we've got all of the, PayPal and the different payment method systems. Those are all at Square. Those are all companies that we should put on our radar, and then we want to start looking for those stocks. And then as the market bases here, when it bases, I don't know if it's 2 weeks, 2 months, 2 years, just whenever it starts to base, we want to have a record of what those great companies are. And then when we start to see those great companies turn up, then we can step on the gas and we buy those great companies, and then we get on the ride relatively early. So we want to be focused on setting up those lists to get that going. So that's what we're going to cover off today. And commodities are wonderful to try and buy near lows. They spike really well, and when they spike, you can get nice annual gains in a couple of weeks on some of these. So another nice place to look. And then for more information on market rotation and market timing, I'm obviously trying to get my website up and working. So please sign up, because anybody who's signed up before I get it up and open, I'll have an extremely low-priced offering to try and build my subscriber base. So looking forward to that. Okay, and on schedule, I am speaking on October the 19th, both live and online. It's the Canadian Technician Day, and we'll be on, if you go to csta.org, and I'll show you that page right away, find the online link. And the idea behind that is literally for $35 Canadian, which is about $25 or $27 US, you'll be able to watch 5 different speakers. So pretty low priced offering there. Okay, let's get into Safari here, and let's just quickly finish off that stuff. So here's the CSTA website, csta.org, and you just hit this join us online for only $35. And again, all times are Mountain Daylight Time. So we start at 8 Mountain, which is 10 Eastern, 7 Pacific. Anyway, just to get that out of the way. Okay, member dashboard. Let's go here and just briefly look at what's going on in the market. So we've got a bit of an avalanche going here. Let's click on the chart. So here's the S&P 500, and I think everybody knows that if you click in on this chart, you can get your gallery view to show up. And so this is the market kind of topping out and rolling over here, and you can just see a series of lower highs, lower highs, lower highs, tried to make a higher high, and then immediately gapped and reversed on the ISM data yesterday morning, and it's been all downhill since then. So this looks like a topping structure to most of us. So that's a concern. Here's the S&P momentum indicator on the daily basis going below 0. Now, the real question is, is it just going to touch and go? And I have a lot more data that I want to share, but it's the advanced decline line data and all that kind of stuff that I put in my weekly market review. More than happy to show you how I use that. I think on last Friday's show on the Market Buzz, we talked specifically about how we might use the advanced decline line data to help us. And it was rolling over, and today's a good example. Once it starts to break down and people start to sell, it's a big deal. So when we get that signal, this is pretty important. So here we have the full stochastic on a weekly chart, and it's rolling over at 80 here. That's not very bullish. Normally you want it to, especially on the S&P 500, you want it to get well up into this bullish zone. So to see this starting to roll over, that's a problem. And we're making lower lows and lower highs on our momentum indicator on a weekly chart. All of those things are sell signals until they change. And so, I know a lot of people, just my Twitter feed is really interesting. When I read through it, people are like, oh, this is, we're only 3% off the highs. And my point would be, that's when I want to be selling, is close to the highs. And when I want to be buying is close to the lows, not waiting for this thing to fall down to December lows. I'm down 20%, get me out. I never want to be selling down here. So that's always a problem. And I think what we want to work on here is just trying to get better at recognizing when the market is starting to weaken, and at least tighten our stops so it takes us out quicker. And then, when we have a big bull market run like we had here that went almost 6 months trying to stay in it, and these whipsaws in the middle here are not inconsequential. They're hard work, because obviously a quick gap down. But I learned a lot from Dave Landry, who spoke in San Francisco with me a couple weeks ago. And he has a really interesting trade on this first spike down, and I found it phenomenal. So I learned something off Dave, and I think he's got a new show starting at StockCharts. So you can always catch that. Pretty smart guy. Anyway, to get back to this, the other thing I wanted to show you today, just covering off point and figure charts. So on point and figure charts, you'll see these numbers, and what these numbers represent. This is 1 for January, 2 for February, 3 for March, 4 for April, 5, 6, 7, 8. So we hit this column in July. In August, we went down. We've chopped around. In September, we broke out to a higher high, and that gave us a 9. And now here in October, we've made this column of O's. So this A gets put in here because it happened in October. So we go 1 through 9 for January through September, and then ABC for October, November, December. Anyway, I think it's pretty clear that we're kind of chopping around and haven't made any real progress, depending on if you're Canadian, any real progress on this layout. So I think we're struggling. We have been struggling pretty much since back earlier in the year, but we continue to chop around. This was, in June, we made this low, and in July, we made this high. And now here we came up here and retested the high, and now it looks like we're failing and rolling back down. All that to say, this market's got a lot more to tell us, but I still think we're having a big weakness problem, and I tried to cover this off in my articles lately, and this was the Don't Ignore This Chart article yesterday for Are the Banks Making a Rerun? And what I want to show you here is, a couple weeks ago, we started to have a difficult time. We had the Fed meeting, and we had the quadruple witching, and I mentioned a rough week is behind us, but what is ahead? And then struggling on a bull. So we were still trying to go higher, but the market was, we kept testing the highs and then failing and pulling back. And then we got a VIX thrust, and I mentioned that, this is a bit of a problem. And then last week, the market spooks are out. And through all of these, I'm talking about the signals I'm seeing. And so I'd encourage you, if you're interested, to go back and look at these, and also to go back and see the videos attached to these and why I changed my mind. Because literally at the August low, I think it was whatever the weekend was, let's say, August 29th or September 2nd, I was starting to get bullish, and by the next weekend I was fully bullish, and then all of a sudden everything literally slammed on a break, and that was the important turning point. So for me, it's not so much predicting the data, it's expect the expected, and if it doesn't happen, then you know that something's changing. And that's kind of where we're at right now. Is we had one of the smallest rallies from the August low, where we basically started and then immediately gave it back, and that's a big deal to me. So at this point, I'm a little bit worried about the bigger picture, and I got a lot of long time frame stuff that's starting to worry me a lot. So That's a concern. Again, if you'd like more information on my market newsletter, you could go here and just type in your email name here and hit the join button. And then when that offer comes out, hopefully soon, I'm having some trouble getting the back network to connect. And as soon as I get that up and running, then I'll be able to release the site. So now let's go back and just look. This is from December 26 lows. This is the absolute performance of every group since then. And new lows here. We've got all of these things going on, and here's the real estate and utilities, and they've been, the top two. They've been two out of the top three going on here. So lots of things to be aware of that as this market rotates. And then what we should see when this market is ready to get real bullish is all of a sudden the real estate starts to underperform some of the other areas like industrials and that kind of thing. We should be able to watch that change start to happen. We don't have it yet. And if we just wanted to compare to the S&P 500, if you were invested in materials, energy, or healthcare, you underperformed. If you were in financials, and that's because financials are a heavy component, but if you were in financials, you basically performed in line with the S&P 500. You didn't get the growth that came with the technology, or you offset the growth with technology by being in an average fund like the S&P 500. So financials were really just in line, but looking across here, technology was the clear out performer, and then we've got real estate. So we're going to take a quick break for commercial, and then we'll be right back. As soon as we do that, we'll start jumping into some ideas on how to get ready for the next rally. Okay, we're back. Real brief, I just wanted to say Dave Landry's show is actually starting at 12 p.m. Eastern today, so pretty much right on it, and you should be excited to catch Dave Landry. He's a fast-talking, very interesting, really strong trader, so if you'd like to trade the markets more aggressively, Dave Landry's your guy. Okay, so what I want to set up here, this is a simple scan, and this scan, I'm going to let you play with the parameters, but let's say that you wanted to invest in the technology sector when the next bounce starts. And why would we want to do that? Well, let's go just pick a chart like Shopify. Here is the December low, and it turned around on a dime and it took off to the upside. And on this bounce out of the hole here, this was a huge run from 117 to 400. You can make money on that kind of thing. So this run is particularly interesting. And when you get those opportunities to buy those really big names and finally you get the market turn, this can be a really interesting place. So we want to get set up with these types of names. And so the idea would be, as an example, let's go pick the technology, and you could do this in each one. You could do it for the whole market, whatever you'd like. I picked a close over $20, so I'm looking for, large cap names that are really going to run. I want to find them, and then I want to start watching them on a chart list, and then I want to look for whatever indicators you like: MACD turning positive, PPO turning positive, full stochastic signal, crossing above a moving average, having some moving average crossover, any of the things that you'd like. But you need to start with a hub list. And I don't really care if, whatever, some weak performing stock Ford turns up. That's not the one I'm looking for. I'm looking for these ones that can move, the price of the Ford stock in a week and really start to crank it up. So we've got to close above $20, and price relative, I want to say over the last 6 months, compared to the S&P 500, the stock is outperformed by 50%. Now, again, we can do this on the whole market, and to do that, we would just literally tap this out, and when we run our scan, there are unrecognized characters. What did I do? Oh, because I started with the word and. Sorry. So we could run this simple scan, and let's go to scan results, and there's 126 stocks. Well, obviously I didn't say stock and I didn't pick volume, so I got a whole bunch of indicators in here. Let's go back. I'll allow you to filter all of that out, but in general, what we would like to do, I'm going to put this word "and" back in, and I'm going to just say, let's do it for the group. And so the group is the technology sector, and the close is greater than $20, and over the last 120 trading periods, in total, it has to outperform the S&P by 50%. We're going to run this scan, and it's going to give us a list. This list is 19 stocks, and again, you could go through and do it by the 11 sectors, and ask which ones are really outperforming. But it's going to crank out this list. So now we take this list and we could even sort it by scooter ranking. It doesn't really matter because all of these stocks at one point outperformed the S&P pretty meaningfully. Now we can go and we can take this and we're going to merge these results or replace an existing chart list, which is the one I would like to do. And so I'm going to go find one, and I've got a whole bunch set up here that are just scanning dump buckets, and I'm going to preserve the sort order, and then we're going to go drop them in here. Now, again, I like to look at weekly charts, so let's go get this stock. It doesn't really matter to me. We're going to put it on weekly. Now, we can see on here that this stock is thinly traded. It's very gappy, and on a weekly chart, that isn't the way it should work. This is a great stock. I agree. But for me, I don't really want to own a stock that's gapping up like that. So we've set up this chart style. Let's go back to the bottom here and apply the style to all the charts in this chart list. So now we don't have to keep changing them to weekly. But then we can go and look under view all and just scroll through them. Now this one is so gappy, that tells me that the volume is way too light, and we can see that down here at the bottom. There's nothing going on. So we could have put it in a volume filter to get rid of that kind of thing. Then we have, here's another one, Simulations Plus, and this thing made a nice move, right? $20 to $40, and it has now pulled back roughly 10. So it's 25% off. That's not a bad place to look, and so you might want to just put this one on your radar for later. And now here's Shopify. Again, I pointed this one out earlier, but 120 to 410, up 300% in 9 months and pulling back. And I just saw an article this morning or yesterday morning on the potential for drones. And what they were saying is they actually expect drones to take online shopping from 13 or 14% of retail to 75% of retail, because it takes the price of a package down to under $1. And all of a sudden, everything can move through drones. Their biggest problem is noise. They're trying to solve the noise problem. If they had all of these drones buzzing a neighborhood, that would be kind of frustrating. But setting up these drones to be able to just quickly go out and deliver stuff very, very quickly, reducing the labor intensity and obviously the waiting in traffic and all that, this matters a lot. And so something like a Shopify, an Amazon, all of these stocks are going to do great. But what we want to see on these stocks is when they start to base, and you can pick whatever indicator you want. For me, let's just say I want to buy it on the full stochastic turning up. It doesn't sound like much, but even on this full stochastic turning up from 132 to 170, you can make some money in there at up $40 or $35. So these fast moving stocks really move fast both ways. And I think if you've been following my work, you'll notice that we were starting to pick up that the market was failing back in late July, and we went into the August slide. Well, this stock didn't even start to bounce here. So you had no signal. It's not like it was, well, I would have got back in and got thrown out. You had no signal that this was starting to turn up. It continues to fall apart. Now here's Roku. I think we all know that this one has been a superstar. I think Tom Boley has been covering this one quite aggressively on the Old Market Watchers Live. Here's 176 down to 100. It's almost 50% off or 40% off. Whatever signal you want to wait for as that starts to turn, you can pick that up. And again, you don't have to buy it right on the bottom, but even if you got it a couple of weeks later, that's not a bad place to get involved. Here's Cray. This one has looks like a buyout or something, so we just delete it. Here's Anaplan. This is obviously a wonderful new IPO. It's giving you a chance to buy it. It's pulling back. So now you're just going to wait until it gets settled all the way in, and it's on your list. So again, I'm not going to go through them all. I'll let you run the scan yourself and get excited by the results. But you can select this to, longen the time frame or shorten the time frame and shorten the percentage increase. So even if stocks were up 30%, that's going to give you a bigger list. You can put all of those into your great trades bucket for the next rally. And as they turn the corner and come out of there, you're going to get a chance to pick them up relatively near the lows. And that way you're not so worried about what's happening now. You're more worried about the opportunity for the upside, because you've got your chart list already. You're scanning it every day, and all you're waiting for is the signals to start kicking in. And we know that when we set up a good trade and we get all ready, then we can put our stops relatively close, but we can watch for the turn. And when we get those rallies, again, even if they're 4 to 6 weeks, they can still be, up 50% on some of these big names. Okay, so hopefully there's some ideas for you there. I do want to go through and look at a few stocks here. So here's Shopify, just on a big trend. Now, what clues did we have that Shopify might be rolling over? Well, we had this uptrend. So you see right in here, call it to the top in July or in August. And you saw a negative divergence over this period here. And when you get that, that can be cautionary, right? But all of a sudden, so you set your stop nice and tight. Well, what happened here was we got the same thing, fell hard, and then it didn't do anything for 3 months. And then it took off to the upside, which was another rally signal, and then sold again. It's not easy. But in this case, it also broke a big long-term trend line on that January breakout. And that was a pretty nice place to get on board. So that's the kind of thing you want to watch for, is these really explosive stocks, and when they can start to turn. Now, if we go pick Amazon, and I think I've left this chart up here, one of the things that is starting to be important about Amazon is this goes back to 2015. And look at this big long trend line, and we're breaking through it, and we actually closed below it last week, and we're sitting down here this week. So are people just accumulating this stock, or are we going to have to watch it break all the way back down and come down to this 1300 level? It's still in a downtrend. There's no reason to own it. It's breaking through the zero line here. So I had put this red dotted line. I'd like to see it break or bounce right in here and start to turn back up again near zero. Doesn't look like it's going to do that. It's going to go all the way down. Well, then I would wait and draw trend lines on my PPO and just wait for that downtrend to break. Again, I don't know how many months it is. Typically, I want it to be 4 or longer. Sometimes on these big down thrusts like this, we don't get that opportunity. And one of the hardest parts about the market is being set up and ready, knowing what you're waiting for. And so in my particular case, I really don't want to buy until momentum is starting to improve. And, again, if you like the way I saw the market roll over to at least help you get defensive and then start to pull back, that's the idea. And then on the lows, when everybody is absolutely terrified of buying, and all of a sudden all your signals are starting to ring bells, I'm just going to go get my chart list for the advanced decline line. And this is but one idea. So here's the trend line on the NASDAQ breaking. This has been getting weaker for 2 or 3 weeks. We briefly broke out and failed. On the show on Friday, I mentioned that this is an issue, and you could see that now we're breaking this uptrend line. And when these uptrends have been breaking, that's a good place to get out. Going back, just, a simple trend line on the advanced decline line. That's one of the many clues that we can use. You don't want to use any one in isolation, but this is just a great example of something going on. And we have the bullish percent index as well. And let's just go grab that while we're here. But this thing rolled over. It's been getting weaker on every rally. So we got down here, and we started off with so much enthusiasm. I actually thought we were going to go right through this. And what did it do? Rolled right over, and I wrote right on here, this worries me while my other data is so bullish. It was staying weak, and it barely got to 50% and now started to fail. Well, let's go look at when the last time it got to 50% and started to fail. That was kind of 2015 top. We saw it in 2011. It got even a little bit higher and then failed. In 2007 and 8, we were down here with very low momentum, got to 50% and started to fail. There's a whole bunch of reasons to be cautious here, and this could be months. I don't know when we'll bottom. I just know we're in a down cycle, and when it starts to improve, that's when we'll get back on board. So I want to use that example, and then the other thing I want to talk about are the IPOs. I realize Uber and Lyft and all of them are ugly, and here's Beyond Meat. Let's just go click on that chart. What you see is this thing's grinding sideways. I guess it's a meat grinder then, or a non-meat grinder. But what I want to look at here on this chart, let's go to, I'm going to put up the weekly chart, but it's not the weekly chart because I'm missing all this data. What I want to see is the big picture here. And as you can see, the 10-week moving average is rolling over, the stock's getting weaker. And for me, this is way more helpful than just looking at that daily chart. So as it gets weaker, whatever, let's say it falls down here, maybe that's a company you like. Now in here, I've got Lyft and Uber and Slack and, here's Pinterest. This thing's grinding lower. To me, I want to see this weekly chart. And what does it tell you? The uptrend is broken. We're working our way lower. But these are great companies. They're going to have lots of eyeballs on them. And as this thing pulls back, you might find that they get bought out. You might find that, but the big institutions that know the growth potential of these companies are going to be sitting here watching these charts. And so that's the ones that I want to play a part on, and I want to make sure that I'm well set up, that when this market turns, I got my top 50, my top 100, whatever the number is. And as they start to turn, I want to buy a little bit of, 10 of them or 15 of them. And as they all start to rocket up, those are the ones that I want to keep riding. And so you get this opportunity. When you get it, it's more important that we're all set up. And as technicians, we have tools. In fundamental analysis, they're never going to look cheap because they still might not even have earnings. But the point is try to get this list all set up. So what I've done here, if I just go into summary mode, I've made a list of all the new IPOs, and they're in here. And if they're garbage, then I don't really care. This is intraday. But, what have they done over the last month? And here's some of the ones that are holding up a little bit better. Well, interesting to see Levi's up there. And obviously, all of these bigger name ones are way down here at the bottom. So here's Work, Slack Technologies, right? That's a slide. This thing opened at 40.39 or something, went up to 42. It's cut in half. It's already 50% off. I saw on Twitter the other day, somebody said stocks can only go down 50%. And I was like, or 80%. And I was like, what? No, I've seen, lots of stocks go from $1 to $2,000 to $1. They can go all the way. So anyway, the big thing is get ready. And the best opportunity we have is when this market starts to roll over. Hopefully you've taken some of these signals and lightened your positions or put stops in so they get thrown out if the market does start to break down. And it just builds your cash pile. And when you get towards the bottom, all of these big names that you like, you can use. And again, in commodity land, that's exactly what we want. We want these things to pull down commodities. You want to buy them near the lows and start to take them on the way up. Okay, hopefully that was informative of some ideas on how to get ready for the future. So thanks for taking the time to join me on Market Buzz. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern Time, 7:30 a.m. Pacific Time on StockChartsTV. You can also catch replays on the StockCharts YouTube channel or on StockChartsTV, which has a running list of technical charting informational shows. Don't forget to check out the new shows on StockChartsTV. There's lots of great ones. Dave Landry today. Thanks, everybody.